Let's try to find an answer to all of that. And we are being joined by Santosh Rao, Head of Research and Partner at Manhattan Ventures Partners. Hi, Santosh. Good to be speaking with you. And firstly, thank you so much for your time.
Morning.
The big news that we all have been tracking is indeed the Moody's downgrade coming in for the U.S. credit rating, and that's from AAA to AA1, citing balloon of the debt and rising interest cost as well. And we all know that what kind of a debt obligations the US economy does have in the times ahead. What do you make of this downgrade, and what implications can it have on the markets?
Yeah, so I think the headline is never good when you get a rating downgrade. But I don't see this affecting the market any materially, because this is a lagging indicator, as the Treasury Secretary just said. So I don't see that as a big reason. But there is an issue of the budget deficits and the debt and all that. That's been overhanging, and that's been the talk, and that's the trend. The Fed chair rather has said that the trajectory of the fiscal health is not very good, but we're not there yet. It's not bad, so I don't expect any major reaction. The headline is bad. Yes, marginally, it's going to have an effect on the yields. People will want more premium for the debt, the U.S. debt, which was very highest rated all over. So I think you'll see that marginally, but overall, I don't see that as a major news at this point, other than a warning shot that things are bad and people are watching, and we need to get our house in order.
Right. Very good morning to you, Santosh. This Shell also joining in the conversation. And, there are articles today that is saying that all of a sudden you have mini sell America trade that is at play, given the fact that you have the Moody's downgrade coming in at a time where you are actually you are inundated with so much of positive news flow over the last 2 weeks, given the fact that you had the trade truce coming in with China, you had the deal coming in with United Kingdom as well, and a lot of partners actually talking to the United States in order to crack a deal. But how much of this one or the downgrade do you think will actually make people reconsider going into the United States once again?
Yeah, I don't see that happening. It's still the safest currency, safest debt in the whole world. So I don't think that's a big issue. It's a safe haven. I wanted to say that. But I think overall, the developments in the last week, especially President Trump's trip to the Middle East, and all the tariff pullbacks, de-escalation, talk of de-escalation, and also some things happening already. So I think all that is good, and that he has a lot of pro-growth policies behind it. He's going to reduce taxes. He's going to cut expenses. So he's going to get the benefit of doubt at this point, and the market is willing to do that. So I think there's a sentiment that things will be okay. That the volatility and the turmoil that we had might lessen a little bit down the road. There's some sense of stability, to the extent that you can get stability in a Trump administration. But I think that the feeling is that, yes, the dust is settling. He has certain policies that will work. So let's wait and see. At this point, the market is willing to give him the benefit of doubt. Things will be okay, and even the world will, because they need the U.S. to really drive the growth engine of the world, global economies. So I think the world will be rooting for U.S. at this point, and things are falling into place. It'll take some time, but they're moving in the right direction. That's what I meant to say.
Point taken. This is Snehi also joining in. You said the market is giving the benefit of doubt to Donald Trump, but what about the Fed? Because the Fed clearly isn't going in tandem with at least what he expects the Fed to do. What's your outlook on when a next rate cut could be on the cards for the Fed, given that you have now more economic factors that are at play for the US?
Yeah, I think one of the big concerns for the federal chair was the tariff. He didn't know where that was going to land. But at this point, I think he's getting a sense that, okay, things are moving in the right direction. It's not going to be crazy 140% tariffs, at least not for 90 days, and maybe extended even further. So I think there is some sense prevailing there on the tariff side. So I think he has much more clarity, better clarity. And if he can get a grip, get his handle around that, the tariff issue, I think he's willing to cut, because the CPI, if you look, the last data that came out, the prices are coming down. PPI came down, CPI came down. So I think that's a good thing. And the sentiment is falling. consumer sentiment is kind of softer, but that includes a survey done when the tariffs were still on. So I think overall, I think things are moving towards him. So you could get a cut not in the immediate the next meeting, but down in the second half, further down, you're going to see at least one or two cuts. I'm in that camp because things are moving in the right direction. Yes, he doesn't want inflation to come back, but if prices are coming down and moving towards him, I think he will definitely cut one or two rates.
Santosh, also help us with your take on the Indian markets as well. Well, of course, we have seen the FI is making a strong comeback. If we see Friday's figure in the cash market, though this buying figure is substantially higher, but other than that, it was supported by some of the block and the bulk deals as well. But given that once again they are building on to that positive stance for the Indian markets, how sustainable it is, and which sectors do you feel that the money is flowing now?
Yeah, I think India is still the strongest market in terms of growth, fastest growing economy in the world essentially, and I'm so glad the war did not go forward because that would have disrupted, affected the sentiment and everything. And the companies want to move into India, and that would have affected. We don't know where the war would have ended. So I'm so glad that that thing's out of the picture, and we are back on the road of kind of building the whole economy. And I think the outlook is very good for the Indian economy. I don't get at a very granular level, but at a very high level, as we look at India, it's always talked about very highly. And I guess the proof is in the pudding. If FII is coming back in, I think that's a good sign. I think that also happened because US was in a turmoil. We didn't know where this was going. The debt was whether he was going to raise. I don't think he was going to cut rates here. So I think the debt. Fed chair's decisions definitely weighed on what the US economy was going to do. And people were saying, it's not the safest heaven that it was. So people were moving out, more money out. So overall, I think Indian outlook is good as I see it from here. It's growing well, and it doesn't have the tariff picture also seems doesn't affect India as much, but it's definitely they're playing into they're doing whatever Trump wants. So I think that's good. So I don't see any disruption there. So net, I would say things are fine. I would continue to invest in infrastructure. India is great, spending a lot there. Other than that, in the US, I can say technology is still big. Materials is big, industrials, and that's doing very well. And the banking sector is going to do well because the economy is expected to pick up. Similarly, there as well, I expect the financial sector to do well, as well as the infrastructure.
All right, then we leave it there. Thank you so much, Santosh, for joining us this morning to help us make sense of what exactly that Moody's downgrade means for US markets. And given the fact that, yes, Indian market still stands out when you talk about the global investor sentiment, and Santosh is liking the infrastructure space as well as the financial space when you talk about the Indian markets.